So we're going to turn now to Africa. And to do that, I have my colleague Pat Thaker, who's going to be joining me on stage in just a second. Pat is our Regional Director for the Middle East and Africa. She's based with me over in London. She's worked at the EIU for a number of years, has covered all of the major Africa issues for us over that period. So commodities, economic outlook, IMF, and G8 engagement, World Bank and the debt write-off issues, all of those things for us. She's fluent in a number of African languages, including Gujarati, Swahili. She speaks Arabic as part of her Middle Eastern role, but today she's going to speak in English. And she's going to enlighten us on the economic outlook for Africa, but more specifically, what strategies businesses are pursuing to try and seize the opportunities that we see in Africa, and what opportunities there may be for Chinese firms to profit in that very exciting and now fast-growing region. So, Pat, if you'd like to join me on stage.
Thank you, Robin. Good afternoon, ladies and gentlemen. I realise it's been a long day, as we term this as the graveyard shift. So hopefully there won't be too many dead bodies by the end of it. So, Africa. I think you've taken. I think it's very reflective of the region that I'm going to cover. You have to engineer your way through difficult times. Okay, Africa. As 10 years ago, Economist ran a cover with the title "Africa, the Hopeless Continent." And the picture you see today up there, Africa Rising, was last December, and that is the reflection of what the continent is like today. Certainly it has changed over a decade. What are the key areas? It's really the emergence of the BRICS, particularly India and China, which is part of the Africa story. They've helped to put Africa back on the map of development and investor interests. This afternoon, I'll be covering what's in store for Africa. Growth, what are the key driving forces, and for you as investors, what are the opportunities and risks going ahead. Sorry, beg your pardon, just bear with me. All right, I'm just going to carry on while they figure out the technology. Africa today. Africa today is, for the most part, at the beginning of the industrialization stage. Think of Eastern Europe, what it was 20 years ago. Think of what India was at 1994. That's the stage of development Africa is at the moment. The last 10 years have been very good for Africa. It's been growing by 5 to 6% per annum. Why? Reforms have been gathering pace, political risk has been falling, debt write-off, commodity prices story has been well documented. So what does it mean for Africa going forward? Economic terms, despite the growth that we've seen in the last decade, and although there was a hiccup in 2008 with the global crisis, it still managed to a growth of 2%. Something like that would have happened a decade ago, Africa would have had a negative growth of almost 10% and failed to recover for a long, long time. So that is just an indicator of where it's heading now. It's a V-shaped recovery we've seen since 2008. In terms of global picture, it's still very small. Despite the growth, investor interest accounts for only 3% of the global economy. However, this is the continent that is attracting Africa's investors' attention across the globe. A recent survey we did titled Investors institutional investors into Africa. It was a survey that was done across a number of multinational companies operating in Africa or looking at operating in Africa. And the final result was they found Africa as holding the greatest overall investment potential of all frontiers market globally. And this is also an area that plan to increase the asset allocation in the long term, with a view that it is a long-term investment in Africa. As a whole, it's made up of a group of countries. So when you look at Africa, it's not just one country, it's a continent. So you need to have a better understanding of what it really means. Growth. What's in store for growth? As you can see from the chart, most of the countries are expected to produce, over the next 5 years, 5% growth. 28 out of 52 countries will grow by 5%. Other countries, some of the countries like Ghana, which are the oil producers, were joined Angola, Nigeria, Equatorial Guinea last year with its first commercial production grew by 9.8%. Going forward, ongoing development in the oil sector and non-oil sector, Ghana is still expected to grow in a fairly high number. Sierra Leone, some of the smaller countries will also give you the greatest potential. Sierra Leone, after the Civil War, is now expected to grow the strongest this year by 25%. Why? Once again, on the back of the mining sector. So it's the natural resources which is still going to grow the fastest, and it is also this area that has been attracting the greatest investor interest. This will remain the case for a number of years. But what we have seen a trend that has been developing, particularly in the last 6 years, is the rising consumer markets as well. So non-resource-based activity has been growing as well. So that is a clear indication that reforms, structures, and regulations are changing positively. Key mineral producers like Tanzania, Mozambique, will also continue to grow very, very strongly. This is where the investor interest is still very strong. Some countries, however, will struggle, like Zimbabwe, where ineffective, poor governance, bad policies continue. So what are the key driving forces of this engine of African growth? You just cannot look at Africa without looking at the politics. As you can see of the title, Peace Dividend. Africa is still considered to be the highest political risk in the world. And the recent coup in Mali is a reminder of how fragile some of these countries are. Mali was considered to be the most democratic, freedom of press, human rights records were still fine. So what went wrong? Just indicates how fragile things are. As you can see from the pictures, there's Nelson Mandela. You have to remember, South Africa's democracy is only 18 years old. So there is a substantial amount of work still to be done there. But a number of economies have made the transition. In 2000, Angola's civil war came to an end, and this is where greatest opportunities have been. What is the other key area that's been the driving force and remains so? Urbanization. The continent's demographics is one of the youngest, and it is a dividend and a risk. It's rapidly changing, as you can see from the pictures, urbanizing very fast. In 1990s, some 250 million Africans were town dwellers, that's excluding the slums. By 2000, the number had increased to 270. It's urbanizing at a rapid pace of 4% per year. 49 African cities now have a population in excess of 1 million. And 5 of those, Cairo, Khartoum, Lagos, Luanda, and Johannesburg, are home to more than 7 million. Over 7 million. Besides Luanda, they're all larger than London. This creates tremendous opportunities, but can be a headache for the local governments as well. So this is one of the key areas that international businesses have been focusing on as part of their African strategies going forward. Market sizing, this will remain a very key area for all of you to watch when you're positioning yourself in this market. The other key area is the trade, not aid. Trade has overtaken in terms of value since 2005, which indicates that it's growing very fast. As you can see from the circles, China's position in 2001, and in a decade it has become, its trading partner has become as large as US. However, you must remember that Europe is still the major, largest trading partner. However, the shift is going south-south. It will take another decade before you can see the major shift taking place. Oil, minerals is still the key exports. Imports, very import dependent, a large number of the economies, including South Africa. Along with trade, Chinese investment has also been growing in a number of these countries. What is the other key area? Technological change. Mobile phone penetration has indicated there is a large untapped consumer market on the continent. This got everybody quite by surprise when it started growing and deepening. The number of mobile subscribers in Africa passed the 500 million mark in 2010. And it has still got more room to grow. With the exception of South Africa, all the markets are just taking off. Along with the mobile phones, as you can see from the picture, fiber optic cables have been laid. Last year, EAC, East African, on the right-hand side came on board. This will help to deepen the internet, telecoms markets going forward. Also helping businesses to operate more efficiently and less costly in the coming years. This also presents huge opportunities for business sector. Together, peace dividends, urbanization, expansion of trade, technological change, all indicate that growth is here to stay. It will have its bumps, but certainly we expect 5 to 6, in some cases 8 to 10% growth in the coming decade. So what are the key opportunities? Against the key areas we've just covered, what do African consumers want? As I indicated, demographics is a key driving force. And as you will see from these three key trading blocks, ECOWAS, which covers all the West African countries, EAC, East African, SADC, all the Southern Africa. Combined, you have covered most of Sub-Saharan Africa. You can see from the charts that Africans need almost development in every sector, and the demand for consumer goods is rising. How you tap into those markets is where your business strategies must consider. Africans need, although when you look at it, you say, well, it's a major oil producer, mining sector, but it doesn't have any refining capacity, doesn't have any manufacturing sectors, plants on the ground, with the exception of South Africa. And when you look at the breakdown of what is needed by Africans, what they are consuming, you can see from electrical and electronic equipment to even iron and steel and cereals. Why food? You ask yourself. This is a region that should be supplying to the world. As you can see from the chart, Africa's arable land is currently globally 40%. Only 10% is cultivated. Why? Underinvestment, lack of clear policy, poor regulations, inefficient supply chains, certainly inadequate fertilization, and it's still the largest employer and key sector in many countries. So this is a key area: agro-processing, development of the agriculture sector is going to be top of the agenda for both the governments and the private sector in the coming years. Countries like Ethiopia have already started investing and benefiting from that on the back of the private sector. The other area for opportunities is infrastructure. This is one continent. Decades of underinvestment, mismanagement has resulted in poor sectors across railways, roads, power. Almost 500 million people, Africans, do not have access to electricity. Just to give you an example of the depth of the problem, in Nigeria, with a population of 180 million, it has the same capacity of electricity as Hungary, which has 10 million. A lot of investment needed there. It's estimated in the region of $100 billion a year is needed just for the power sector. There has been a lot of work being done in the last decade with the Chinese investment. They are building a lot of the roads, railways, ports, airports, but more needs to be done. The airport story is well documented, it's congested, it costs you just as much to send a crate from Dar to Durban, then from Dar to Singapore. So plenty of work and investment opportunities there as well. Services, another key growth area, both from commercial, retail outlets. Almost 90% of the Africans are unbanked. And as the economies grow, they move up the global chain, consumers will need access to the banking services. As you can see, the innovative payment solutions in the interim period, like M-Pesa in Kenya, has helped to boost services sector in that part of the world. Securities exchange are very mature and plenty of room for growth as the economy and the financial sectors continues to grow. Private equity firms have been looking very closely at this continent for the last 2 years, particularly since the global crisis, and realize that there are great opportunities there. One of the other benefits is it's open to foreign banks across a number of countries. Consumer goods. We've talked briefly about the urbanizations. Private consumption is similar to that in India, as you can see from the charts, but it's growing fast, but not as fast as it could. Why? Lack of credit facilities constrains growth. Also, the availability of how to shop. Shopping malls are growing as cities are growing. However, it does not capture the large percentage of the consumer market. Going forward, this is an area that could be growing as well. Manufactured goods, as you saw from the chart when we looked at the 3 trading blocks, that the need and the demand for manufactured goods is strong and it will continue to grow. However, very little is produced on the ground. This is what is needed both to create jobs and to supply to the local market. China is playing an increasing role in this area. One of the key things that's planned over the next decade is to establish free economic zones in the key financial and business hubs of sub-Saharan Africa. There's already one in Mauritius, planning one in Johannesburg, Nairobi, Lagos, and Accra. So these are key developments that you need to take on board, especially when you want to establish manufacturing industries on the ground to supply both to the local market and export markets. So which are the star performers? Which are the markets you need to look at over the next decade? We've actually identified it according in 4 categories. The lowest political risk. Political risk is very important, as we've seen. However, you can see that the countries that are in that web of low political risk is Botswana and Mauritius, but they're very small markets, but safe markets for you to establish your businesses with a view to working in the other parts of the region. Botswana has tried to compete with Mauritius, but it is still very weak in terms of technological development. A lot to catch up on. Ethiopia, as we've touched, is the second largest market. If you look at the fast reformers, Ethiopia is not on the radar of a lot of the investors, but it's been it's the third largest population in sub-Saharan Africa, and it's been growing by double digits for the last decade across the agriculture sector, power, roads, ports, a number of areas. However, this is where the opportunities are there as well. The financial sectors and the telecom sectors are earmarked to be privatized. This is a growth area that will help to support even more double-digit growth going forward. The other reformers are Kenya and Ghana. Ghana is a success story in West Africa, something to watch out for. Highest investment, predictably, is in countries which are considered to be safe, predictable, regulations are tight, transparent, is South Africa. South Africa is still the financial and the business hub of sub-Saharan Africa, and is a key port of entry. And South Africa, of course, by measure, is the biggest economy, contributing almost 70% of the GDP. However, going forward, the greatest prospects are not just in South Africa, but in the other markets. Particularly growing fast is Angola, Nigeria, which are all growing not just in the oil sector, but the non-oil sector. Great opportunities there, and by 2016, we think Angola and Nigeria will overtake South Africa. What are the challenges and risks? There are plenty in Africa. What keeps investors awake at night? As you can see, the picture is busy. Africa is not a country. It's made up of 55, 56 if you consider South Sudan, which means 56 different regulations, different governments, different languages. 2,000 languages are spoken on the continent. So you have to navigate through a very complex business environment. Corruption, very close to second to infrastructure headaches. Still growing. Why? Institutions are very weak. The political will is not there to address it. And what we have found is that corruption is actually getting worse as the economies are growing. The projects are big ticket projects. The numbers are much bigger as well. So this is something that you need to take on board in a number of countries. Institutions are also very weak, bureaucratic, cumbersome. For instance, it takes 2 days in Rwanda and 4 procedures to set up a business. In Nairobi, it takes 24 months and almost 30 procedures. Poor skills base. Everybody who's operating in Africa at some point has very much highlighted the skills shortage. This is one of the key areas of concern as well. What will it take? Governments are definitely putting aside almost 10% of their spending on education, but we estimate it's going to take a generation of public and private investment to see a difference in that area. So what's the conclusion? As you can see, the map is very busy, and that does not include the oil and the minerals companies on that map. Most of the top 500 Fortune companies are already operating, have been for the last decades, and will continue to do so. The potential we've already covered. The growth, the various sectors, almost every area needs to be developed. The opportunities are there, however, the risks are equally challenging. So when you look at Africa, you really have to do your homework. Not just as a continent, but individual country. And it's a business model that you need to keep going back and revising. What worked, particularly if you look at Zimbabwe, it was a success story, and overnight it was a headache for investors. So do your homework, keep revising it, and certainly going forward, it is a market you should still look at. Thank you for your attention.
I'm from Standard Bank, South Africa. I think my comment is, when we talk about investment to Africa, we should not start from what Africa needs, infrastructure, electricity, housing, food, etc. Nobody going to invest because you need them. So from an investment perspective, you always need to think about what you can give to those investors when they make those investments to Africa. So from our view, I think the great potentials for Africa is still the resources. I think the huge mineral resources and also the new discoveries of the petroleum, both along the Equatorial Gulf and also along the Indian Ocean, near like Mozambique, Tanzania, etc. And also it's the huge new discoveries of the iron ore mines alongside the Sierra Leone, DRC, and also Liberia. There's Ghana, Gabon, and Cameroon. I think those new discoveries amounted to more than, I think, is 100 billion tons of new iron ore in those areas. So because all those huge attractiveness of those resources can attract the huge investment into the infrastructures like long railways, roads, ports, and also then bring people to invest in those labors, education, clinic, schools, and also build those hotels, etc. So I think we should still start. Let's don't shy away from start from minerals. Nobody, I think, Africa needs China because China can put in big money to unearth those, unlock those wealth from Africa. I think this is the key. I would say that's the future about Africa. Only start from this point, then Africa can really start and get to the stage of I think it's a better circle of its economics.
I agree. Certainly, as I said, natural resources is going to be still the big part of investor interest. However, what we've seen is the non-resource-based countries like Rwanda, Ethiopia, who is reforming fast, creating the right environment and regulations and opportunities also for companies to come and establish themselves. There is a rising, very slowly, but it's rising. The demographics are indicating that there is a market for consumer goods as well. As you saw from the top 10 imports as well, the demand for electronics, innovation, financial services, this is some of the key areas that will continue to grow along with the oil sector and the minerals.
Thank you. Yuan Tang from Ministry of Commerce. Over the years, I've been involved in some of the discussions about so-called trilateral cooperation among Chinese, European, and African companies. Of course, there are some political implications. I don't want to go into that. Based on your analysis of the opportunities and challenges, what do you think are the potential areas where Chinese and European companies can cooperate, where Chinese and European companies can cooperate in producing results in Africa? I don't know whether you think, for example, agriculture might be a starting point. Thank you.
It's a very good question. You have to bear in mind when you go into Africa, it's growing. It is the final emerging region. There are great opportunities there, but a large proportion of people are still very poor. They're going up the economic chain, but not fast enough. Development of the resources, which is the pool of people, is very, very important. We've seen it of the Arab Spring last year. A question that comes to mind is, will Africa have an African Spring if it doesn't address some of the social, economic expectations along with the growth that's growing? More governments face political upheaval on the way up than when it's not growing. Expectations, managing those expectations. So I would say investors have to be part of that development. Transfer of skills, development of the human capital and social, housing, access to all the basic needs. And this is something that the corporate responsibility has to be part of that, along with the government. One final question. Got room for one more. Okay. Thank you very much. Robin?